You go back to 2020, it started with the German Bundesbank, and then it was the Dutch National Bank, the Bank of Austria, Hungary, Turkey, Poland. They all repatriated their gold. This has been an ongoing deal that is accelerating. Saudi Arabia has repatriated their gold. India has brought 100 metric tons back from the Bank of England that they've held there since 1991. I think when you weaponize the financial system against other countries, the rest of the world says, geez, could that be us? Perhaps we ought to bring our gold and silver back home. And that's really what you are seeing. Even the gold that China is purchasing off of the LBMA is immediately melted down from 400-ounce gold bars into kilo gold bars and disseminated. They want to get as far away from allowing the Bank of England to hold their gold or the New York Fed as possible. And I think that is a trend that will continue.
In recent months, central banks have continued to actively purchase and repatriate gold, reflecting ongoing efforts to diversify reserves and enhance financial security amid global economic uncertainties. As of October 2024, central banks collectively acquired a net total of 60 tons of gold, doubling the average monthly purchases over the preceding year. This brought the cumulative net increase in global gold reserves to 694 tons for the first 10 months of 2024, aligning with the record levels observed in 2022. The Reserve Bank of India significantly increased its acquisitions, purchasing 77 tons in the first 3 quarters of 2024, 5 times its total purchases in 2023. The Central Bank of Turkey followed closely with 72 tons, elevating gold to 34% of its total foreign currency reserves. Other notable buyers included the central banks of Poland, with 69 tons, and China, with approximately 30 tons. In addition to increasing its gold purchases, India repatriated over 100 tons of gold from the United Kingdom, marking the first such transfer since 1991. This move resulted in the majority of India's gold reserves being stored domestically, reflecting a strategic shift towards enhancing control over national assets. The trend of repatriating gold is not limited to India. Countries such as Germany, the Netherlands, and Austria have previously undertaken similar initiatives, retrieving significant portions of their gold reserves from foreign vaults to bolster national financial security. This rapidly growing trend indicates that central banks are increasingly viewing gold as a strategic asset to mitigate portfolio risks and diversify foreign currency reserves. The World Gold Council's 2024 survey indicated that 29% of central banks plan to augment their gold holdings in the next 12 months. Additionally, the freezing of Russia's foreign exchange reserves in 2022 has heightened concerns about the security of assets held abroad. This has prompted countries to repatriate gold to safeguard against potential sanctions and to reduce reliance on the US dollar, a process often referred to as de-dollarization. According to popular bullion dealer and president of Miles Franklin Precious Metals, Andy Schectman, the gold accumulation and repatriation trend by central banks points to a bigger endgame, one that could result in the complete restructuring of the global monetary system, with tangible assets like gold and silver taking the place of debt-based, easily inflated fiat currencies. Andy suggests that central banks have been gradually strengthening their gold reserves in preparation for this endgame, and urges stackers to hold on tightly to their gold and silver holdings before it becomes impossible to buy more. As we present clips from Andy's interview, please take a moment to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate your support and hope you enjoy the video.
It was a situation where I think there was a lot of selling by the bullion banks who took advantage of the euphoria surrounding the Trump election. You had these bullion banks that were getting hammered on their short positions. You had a lot of accumulated gains by the managed money. And the risk-on Trump euphoria that came along with his victory provided an opportunity, I think, for these banks to kind of square their balance sheet, so to speak, pushing the ball down the hill. And we saw gold fall off by $200, silver fall off by $3 or more. And you look at the amount of short covering that we saw by the commercial banks, it was very, very significant. And here we are, 6 weeks later, and the price has recaptured the majority of what it fell. This was, I think, to be expected. It doesn't change anything in terms of the ultimate outlook for gold and silver. But it certainly has redirected some rhetoric and some thought that this is transitioning from a risk off position to a risk on position, and I think that will lead to what we've seen: softness in the market, selling by the institutions, and people looking at things that maybe this time is different. I think they'll find out that this time isn't different. And the smart traders understand that. And the smart traders, to me, are the central banks who are increasingly standing for delivery. China is a prime example. They told us they took time off, but they didn't. They added 60 metric tons last month. They're continuing to add both gold and silver. And it's not just China, it's India, it's Saudi Arabia, it's all of the BRICS nations. India continues to record imports in both gold and silver. So the softness that we have seen since Trump was elected, to me, was an opportunity for much of the world to continue to accumulate. At the same time, it was an opportunity for the commercial banks to alleviate some of the pressure they've had on the short sides. Fundamentally different. It was just the market, I think, exhaling and using that opportunity to do so. Yeah, well, I mean, for example, the PBOC is supposed to report gold imports, right? And I would argue that the PLA, the People's Liberation Army, has as much or more than the PBOC does, and they do not report to the IMF. If gold is purchased by a proxy bank, a commercial bank on behalf of the PBOC, that's not reported. And one of the very interesting developments that we've seen over the last several months in doing interviews with guys like Sean Kuhn, he's acknowledged the fact that they're seeing China fly all over Latin America, South America, and purchasing doré and concentrate directly from the miners, disintermediating the marketplace. They're buying this stuff, paying far more than the West will pay for it, sending it back to China to refine it. And in doing so, it's really opaque. It has really no effect on the price on the marketplace. 78% of all the silver that China is using for industry right now is being purchased in the form of concentrate directly from these miners. And so it's a situation where, not only that, look, they've been producing between 300 and 500 metric tons for 25 years. Those numbers in and of themselves are far in excess of what they purport to have, 2,500 metric tons. Jay, my whole career, everyone told me that the numbers that China purported to have were way, way off. They would stay at 1,200 metric tons for year over year over year, never increase. So I think just like the West hasn't really audited Fort Knox or the holdings of the United States since, I think, 1953, I don't think it's in any of the countries' vested interest to square up exactly how much they have. And whether it be this giant new discovery they supposedly found, maybe that's an excuse for them to say a year or two from now, yeah, actually, we have what Alistair McLeod was saying. We have 38,000 metric tons, and much of it came from this new discovery. I don't know. There's a fine line between conspiracy and reality. But guys that I follow, like Alistair, 2 years ago said that state had 20 and the people had 18, which would be 5 times more than the West does. Any way you look at it, I think not only is it not in their vested interest to be forthright about what they have, I think 100%. They have not been open about how much they've purchased. In fact, they said they weren't purchasing it, and the import-export numbers coming out of London and Switzerland betrayed that rhetoric. So this is a game about who can accumulate the most without being open about it until it's time to be open about it. 100%, you got that right.
So then when you hear a stat like, what do we have, like 22% of central bank gold holdings is held out of country, so 78% has been repatriated to those countries. That number is going to be really hard to get accurate, and it's probably massively understated if we don't actually know what's contained inside the borders of China and probably a bunch more countries, correct?
Right. Well, what I think that number you referred to is speaking to is the rapid importation or repatriation of gold from the LBMA and from the COMEX. And quite frankly, who the hell would trust the West after the weaponization of the treasury market? And you look at the LBMA refusing to return Venezuela's gold. So I think these countries understand that it started with the German Bundesbank, and then it was the Dutch National Bank, the Bank of Austria, Hungary, Turkey, Poland. They all repatriated their gold. This has been an ongoing, methodical deal that is accelerating. Saudi Arabia has repatriated their gold. India has brought 100 metric tons back from the Bank of England that they've held there since 1991. I think when you weaponize the financial system against other countries, the rest of the world says, geez, could that be us? Perhaps we ought to bring our gold and silver back home. And that's really what you are seeing. Even the gold that China is purchasing off of the LBMA is immediately melted down from 400-ounce gold bars into kilo gold bars and disseminated. They want to get as far away from allowing the Bank of England to hold their gold or the New York Fed as possible. And I think that is a trend that will continue to grow. So yeah, it's a stark departure from what has been normal, all of these countries repatriating their gold. And I think it makes sense if you look at it from their perspective.
By repatriating gold, central banks ensure that their reserves are physically within their own borders. This reduces reliance on foreign custodians and increases control over critical assets during times of geopolitical tension. Countries like China, Turkey, and some European nations have expressed concerns about overdependence on Western financial institutions and potential biases in how reserves are handled. Historical instances, such as the seizure of Iranian assets, have also left lingering distrust in the impartiality of major global financial hubs like New York and London. During their interview, Andy also talked about the general state of the financial markets, particularly the stock and crypto markets, and recent trends of billionaire investors selling significant portions of their stock holdings despite generally high valuations. For example, Amazon boss Jeff Bezos has sold over $13 billion worth of Amazon shares this year. In November alone, he sold more than 16 million shares, totaling approximately $3 billion. These transactions were part of a pre-arranged 10b5-1 trading plan established in May, which outlined the sale of 25 million Amazon shares by the end of 2025. Bezos completed this plan earlier than anticipated, concluding with the sale of 39,538 shares for $8 million. Warren Buffett's Berkshire Hathaway has also been a net seller of stocks in 2024, divesting approximately $127 billion worth of equities through the first 9 months of the year. Significant sales include reducing its stake in Apple by nearly 2/3, selling $75.5 billion worth of stock in the second quarter, and trimming its position in Bank of America by $1.5 billion.
Well, I think things we should be concerned about is you got to wonder if the insiders, the corporate execs are calling a top in the stock market. For every insider buyer right now, there are 6 insider sellers. You got guys like Bezos, who sold $1.25 billion worth of Amazon in November. He sold $12.5 billion in stock in 2024. Zuckerberg cashed out $155 million worth of Meta. Recently, that brings his over the last year to $2.4 billion, $1.85 billion in year-to-date sales in NVIDIA insiders. And this is at a time where corporate execs are cashing out and individual investors are more bullish than ever. 46% of individual investors see a 10% less chance of a market crash. This is the highest percentage since 2006. And, kind of just talking about what Adam was saying about the Buffett indicator. Look, you could argue, I think it's pretty well if you took an impartial position that the stock market has detached, or Wall Street has somewhat detached from Main Street. And, when you have a situation where the government prints tremendous amount of money, that buying causes prices to rise. The buying of bonds and stocks causes prices to rise. And as a result, the market's growing faster than the economy. And so the stock market capitalization to the GDP ratio, that's the Buffett indicator in essence, is leaving the market very vulnerable to a correction. That indicator is at 206 right now. It's 142% above its long-term average of 85. That goes back to 53 years ago, to 1971. And, this is something that I think is kind of not really sinking in yet, and we have this euphoria that is not just contained in crypto markets, but also in the stock market. When we talk about crypto, when we talk about Bitcoin, I too am somewhat agnostic. I own 1.5, almost 2 Bitcoin. Because I too, after coming to your show last year, having lunch with Mark Moss and Natalie Burnell, they opened my eyes. We went across the street, we had lunch, they opened my eyes. And I did. I started buying little bits. I've been buying gold and silver every 2 weeks for 35 years. That was a promise I made my father when we started this company in 1989. I've never missed a 2-week period. But after lunch with Mark and Natalie, two people I respect a lot. Mark is a smart dude, and I didn't know Natalie as well as I do Mark, but she is as well. And I listen to their viewpoint, and I think if you're married to a singular viewpoint and you only focus on that viewpoint forever, you learn more and more about less and less till you become an expert of nothing. So I listened to what they said, and I dipped my toe in, and every 2 weeks since your show almost a year ago, I bought a little bit. I have almost 2 Bitcoin, but I am concerned about 2 things, and maybe it's because I don't know what the hell I'm talking about as it pertains to Bitcoin. There are 2 things that make me go, a little bit. One is if you look at all of the stable coins, right? Tether, USDT, USDC, same kind of thing, dollar stable coin backed by Goldman Sachs, I believe, and now this new Ripple stable coin. These are all dollar-based coins that are what you do when you are trading inside the ecosystem of the cryptoverse and you don't want to go back out into dollars, you move into a stable coin like Tether, like USDC. And they are about 85% or even higher supported by what? What the Chinese are selling, what the rest of the central banks are selling, U.S. treasuries. So as a reason to kind of support the crypto narrative, you have massive amounts of money. Look at all the money that is going into crypto. It is anything that goes into these stable coins is in essence supporting the legacy system. That makes me wonder a little bit how that all plays out if we were to see a problem in the Bitcoin market or in the crypto market, what happens to the bond market. And the other thing that really kind of confuses me, and I'm going to ask Mark this when I see him next month at your show, is that currently the circulating supply of Bitcoin, 19.8 million Bitcoin, currently that's the supply of the 21 million. These are changing hands in the market approximately every 3 weeks. And this level of trading velocity kind of this activity is more like a meme stock where it's trading over and over and over again. And if all of these people are buying and holding, how are 19.8 million coins changing hands approximately every 3 weeks? I don't quite understand that. I'd like to know more. This is the problem to me about crypto, is that I don't understand it, but I do understand that I don't want to kick myself down the road. Am I a Bitcoin supporter? No. Am I a Bitcoin enthusiast? No. But I do believe that our 2 camps should be complementary to one another. They should not be divisive, and they should not be at each other's throats. We should not be divisive. In fact, I would argue that in many respects, we understand the problem that is of fiscal irresponsibility and brain dead monetary policy and a government that is really. The people who buy gold and silver, I assure you, are not doing it to become wealthy. They own it because it is wealth. So I think the way that these 2 markets or these 2 groups of people can find harmony is to understand that with all of this profit, let's call it the plug your nose trade, where you may not want to be in it forever, but you understand it can change your life in some of these cryptos in terms of their ability to create wealth like that. And it's true. You look at XRP, how fast it went up in a very short period of time. Now, those who've been holding it for a long time would say we've been holding it for a long time. It didn't go up so fast, but it went up like that once it went up. That profit in something that is completely speculative and new to the world, you should take pieces of those that winning, if you will, of those winnings off and put it into gold and silver and let it sit and let your principal continue to rise and pick a number, 10%, 20%. Anytime you're above that number, pull it off and put it into gold and silver, because it is wealth that the central banks are buying. The central banks are the most knowledgeable traders on the planet. They know the playbook. They're buying physical commodities hand over fist. Now, we have seen greater acceptance around the world to a degree. Talk of a Bitcoin strategic account What should be mentioned when we talk about that Bitcoin strategic account that was talked about at the Bitcoin meeting in Tennessee a few months back is what happened right after Trump got off stage. Well, it was Senator Cynthia Lummis who got up on stage that she is advocating for revaluing the gold held by the Federal Reserve on behalf of the Treasury to a level sufficient enough to take some of the profit or proceeds and buy Bitcoin for the strategic account, which mirrors exactly what, not exactly, but symbiotic at least, with the head of the Dutch National Bank, who has been calling for gold revaluation for quite some time. And I do believe gold will be revalued. I think it would benefit not only the central bank's balance sheet, but those of all of the central banks. And if you look at the amount of gold that has been accumulated by all the European central banks as a percentage of their GDP, it's like spot on the same with every one of them. And so it's as if they are preparing for some form of a gold revaluation, which falls in line with what I've believed for the last 4 years, that they will issue a new system tied to gold. Why else would the BIS reclassify gold as the only other tier 1 reserve asset? Why else would Kristalina Georgieva, the head of the IMF, say that a CBDC not pegged to something is fiat? Why else would the BRICS payment settlement system called the unit be a 40% gold-backed plan? All of these things speak to gold having a role in the next system.
Andy Schectman believes central banks are purchasing gold at unprecedented rates, suggesting a strategic positioning ahead of a possible revaluation. He believes this could be a method for central banks to manage debt and inflation without resorting to hyperinflation or default. The Miles Franklin president cites the example of the BRICS nations, which are exploring the introduction of a new common currency, potentially backed by gold, to reduce reliance on the US dollar. He suggests that such a move could lead to a significant revaluation of gold, with speculative figures reaching as high as $150,000 per ounce. We'd love to hear your thoughts on Andy Schectman's predictions and analysis. Drop your comments, insights, and observations in the comments section below. Don't forget to hit the like button, subscribe to the channel, and turn on notifications for more videos. Thanks for watching, and we'll see you in the next one.